Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. Beautiful morning here in Denver, Colorado, as always. Today, pleased to be joined by my friend, Mr. Jeffrey Avalos. Jeff, how you doing, buddy?
I'm doing wonderful. Thank you very much for asking. Happy Monday. I hope everybody had a great 4th of July weekend. How are you doing today, Kevin?
Yeah, man. Nice long weekend. Got some things accomplished. I got to enjoy some sun, some pool time, a little bit of family time, of course, and some yard work. What 4th of July weekend wouldn't be complete without some yard work? So hope you got something of the same there this weekend as well.
I did, yeah. I got to do some projects around the house. I got some things done. Happy to do that. I was in San Diego, so I got to enjoy just throngs of people all along the beach, which was a lot of fun. And it's always spellbinding being near the ocean or the water on a 4th of July weekend. You see everybody out there with their families, and you're like, okay, we're in this together. We're all kind of moving in the same direction. So sort of like
That's
that.
Right. Yes, and we're going to talk about moving in the same direction here today as it relates to the market, obviously. We had a wonderful finish to the week on our abbreviated day Thursday. We had a stellar jobs report, led to some new market highs, and we're going to look at a bunch of charts today detailing all of that. So quickly say hi to Mike Fairborn there in the chat. He'll manage things for us there. Mike and I can be tracked on X if you'd like. Mike Fairborn CS, Kevin Horner CS, a great way to engage with us outside of the classes that we host for you here. And we try to post for you throughout the week with some notable content. So check us out there, of course. Let's get to the disclosure so that we can get to the charts for you all, everybody. First and foremost, remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for specific approaches to trading the market. We want to give you a lot of ideas for consideration. One of those ideas is going to lean into technical analysis, which we rely on here to understand the existing trends of the market. But it's important to remember that technical analysis is merely a piece of your overall decision-making puzzle, and we do not encourage you to make decisions on your trade activity specific to technical analysis exclusively, meaning make sure it's simply a piece of that overall puzzle. All right, and then beyond that, actually, we go ahead and remind you of our agenda, which we do usually start broadly. So we're going to look at the biggest of our indices, the S&P 500. We're going to look at the NASDAQ 100, also the Russell 2000, and then we'll move into the semiconductors as well. Now, today we have a lot of stocks in the downgrade list, oddly enough, and we're going to look at some of those. We're going to look at some upgrades as well. So today we may very well be leaning into a little bit more of an individual equity look at the broader market, but plenty to cover nonetheless. So let's get right to it here, Jeff. The S&P, as I said, Thursday had a really strong day, and we continued with not just another high, Jeff, but a gap up move that just continues to show the upward bias that we've been dealing with here over the last couple of months.
Yeah, you're right. And if everybody recalls, last time I was on this show, and this was quite a while ago, about a month and a half or so, one of the things that I had shared is when you have a gap up movement, they tend to continue to perform well, they being whatever component it is that you're looking at here. So with the S&P 500 having that gap up now stay up day, this could spell for potential bullishness, especially in the short term, call it the next week to 2 weeks as we start to enter earnings season, Kevin. One of the things, though, that did catch my attention that I'm curious on, that relative strength index went above 70 or so, and then you kind of see it spike, and now today it's starting to come down a little bit. Is there anything that traders should be considering or keeping in mind as they look at this possibly turning over? Or is it just a bounce and stop, and maybe it stays in overbought territory for a little bit longer?
Well, it certainly could. Obviously, one thing we know about overbought conditions, Jeff, they're not generally bearish. Movement out of overbought from overbought below the 70 line out of overbought conditions can sometimes be a signal that trend traders will incorporate, right? To aid them in their decisioning. They might say, all right, maybe the trend is weakening a little bit. I can take some profits as a result of that. Some traders will utilize that thought process, but by no means is that the only thing to consider here, Jeff. What about a throwback to our breakout level? A lot of traders were looking at the potential of 6150 providing some semblance of resistance, Jeff. I really can't say that it provided any resistance at all. We blew right through there with conviction.
Yeah, with a very bullish outlook overall on the market. And I got to quickly just pause for a second and say hello to our friend and former colleague, Mr. Mark Idom. I mean, I see that name come across the comment section. And I go, oh my gosh, love that man to pieces. Absolutely wonderful human being, Mark. I hope you are doing great, my friend. Always great to hear from you. Uh, Talk about a gentleman that knows a lot about the markets and understands the way things move. But Kevin, I did want to mention though, as we're starting to look more at what's happening in the market overall, remember everybody, we're going into earnings season. So we just closed out the second quarter, got earnings season coming up. So watch out for that. That could spike the volatility, and I'm sure we'll take a look at that in a moment. But I think you're absolutely right when you touch on the fact that while we came up, a lot of traders out there were looking for a throwback and a potential hold on that former resistance, what would be the new support line.
Yep.
Without seeing that, I think that gave more credibility to the bull side because it said we don't need to come back and test where we used to be. We can continue going higher to a lot of traders out there. So I think that's something that's going to be captivating a few traders today, but I think there's a bigger camp that might be thinking this trend has a little bit more legs. We'll see what happens.
Yeah. Yeah, absolutely. All of that seems to be valid to me as well, Jeff. I mean, we'll watch that breakout level at 6150 approximately. We'll watch the rising 20-day moving average because, again, it remains up, not only beautifully uptrending, speedily uptrending, but it's about to catch up with that breakout level, providing some confluence at that same 6150 zone of potential support. Now, if we're going to get kind of parsing, get to the point where we parse all of the breakdown moves, well, the first thing we need to see for some weakness would be to fill in the gap zone that we've got from Thursday from last Wednesday into this last Thursday. So a lot of traders are going to look to see if this high is the highest of our rally, everybody. The first thing we need to do is trade below the low of our high day. And that could lead to a pause in the trend. It could lead to some consolidation. It could even lead to an actual price drop and pull back to the 20-day, Jeff. But by no means are we there. So traders, keep an eye on that 62.46 area. That was the low from Friday. Under 62.46, we could fill this little gap from Wednesday into Thursday. The high there was 62.27. So that could give you an approximation of a range to keep a close eye on here for the day at least. And we'll see if the concerns around the replacement or the 90-day pause having come to a conclusion as of this week, Jeff, if that's really what's giving us a little bit more volatility. We did hear over the weekend from the president and from Commerce Secretary Lutnick that they were asked to clarify approach on tariffs, and it sounds like tariffs will go into effect on August 1st. But according to Mr. Lutnick, the president is setting the rates, the deals, and he's doing all of that right now. So the market is already kind of forecasting a little bit of uncertainty here with today's action, it would seem, Jeff.
Most certainly. Yeah, I think there's a lot of what's going to happen and what ifs, of course. And there's talk of the taco trade and, well, is he going to actually follow through with it? Is he not? And I think that weighs a little bit on traders' minds. As we're looking at the NASDAQ, though, one of the things that you're noticing here, Kevin, the gap up did happen on the NASDAQ, but it just, looking at this, I don't know if we can zoom in, it doesn't seem to have the same amount of strength that we saw with the S&P 500. You notice that today's candle just slightly below our open on Thursday for that short day. I don't know that there's going to be a lot of traders out there saying that is conviction in their book. So I think that's something that's probably going to be on the minds of a lot of folks as we go into the Monday, Tuesday, Wednesday action of this week. What are your thoughts?
Yeah, I'm thinking the same thing. You know, just said it a moment ago as it related to what we got on the SPX. But essentially, you're going to want to see, do we maintain the lows from Thursday, or do we start to slip back a little bit and maybe get into this, you know, the zone here was 22,200, which was our previous all-time highs. And then now that could very well become new support. You'll notice here, Jeff, there has been actually some outperformance from the NDX, albeit not the last day or two, as you're pointing out. But notice how that 20-day is basically even to the breakout spot, providing us some confluence. And of course, last week I spoke about this on Thursday was the 50 crossing the 200 to the upside in both the S&P and the NASDAQ 100. That's not a negative either, Jeff. That's a bullish indication over a longer window of time, even if the short term shows some weakness and maybe some pullbacks or consolidation.
The famed Golden Cross is what they
Yes.
usually refer to that as, for those of you out there who are following along.
That's entirely accurate. And I pulled up some data from one of the followers that I have on, or one of the people I follow there on X, and he was pointing out that these types of moves, these 5,200 crosses in the future, these generally tend to lead to strong returns. And I ran through some of those returns last week, but ultimately what it was signaling was that, over a 3-month window following the Golden Cross, over a 6-month window, and over a 12-month window, the high percentage of return instances where you're positive, meaning like 80% of the time in both a 6-month and 12-month return, the market was up following the Golden Cross. So you can experience some short-term weakness as we consolidate initially, and the return details just get better on following a 6-month timeline or a 12-month timeline, as opposed to a 1 or 3-month, which still showed a higher correlation to positive returns, Jeff, but not as high as you would see over a longer window of time in terms of actual percentage returns. So, once more, traders, manage yourself, manage your individual positions, utilize the opportunities for consolidation to build cash if you feel the need to. If you're comfortable staying fully invested and you're going to watch something like the 20-day moving average, Jeff, my only reminder is the distance in our price action to the 20 days, because the 20-day moving average now, given how strong the market has been pushing, it means that we have to give up a fair bit just to find support. And Jeff, not every trader is comfortable giving up profits just to be told that they were wrong 2 days, 3 days, a week later, right? You don't want to necessarily base that decision after a 2, 3, 500 point pullback.
Yeah, well, it comes back to the concept that you always talk about, risk management. As you're looking at your risk to reward ratio, if you're saying I'm using the 20-day simple moving average, okay, like you mentioned, Kevin, that's a little bit further than it normally has been over these last few months. So what are you going to do? You're going to have to adjust your risk to reward ratio. Maybe you utilize something other than the 20-period moving average, or maybe you say, no, I know my trade plan. I plan my trade and I trade my plan. I do not have the risk to reward ratio I need right now. I'll wait another few days and see if it comes to fruition. Then I'll start placing on some trades.
Exactly that. And Jeff, when I did the math on it here, I'm just looking at the difference between our last trade at 22,755 and the 20-day at 22,130. So that's about what, 600 plus points. So if we just took a look at where we are right now, 600 points would be about a 2.5% pullback in the NASDAQ 100. That's not a huge pullback, Jeff. That's a really reasonable pullback. But if you're invested aggressively, or maybe you're invested across the board and all your dollars are spent and you're wondering about generating cash, you know what? Sometimes, Jeff, if you start thinking about the potential for a pullback or the time it might take to allow the 20-day to rise near price action, giving us a sideways move in price as opposed to a pullback in price, not everybody's going to want to stick with all of their trade 100% of the time. They may want to generate and build some cash. And I have to talk about it because, again, if I don't, and I feel like I'm not reminding traders of sticking to their plans and adherence and all that fun stuff. So, it's a big part of what I believe in here as a host, the need of traders to manage their positions along the way relative to their comfort with what they're seeing. Jeff, we got to talk about the Russell here real quick, because
what's going on with the Russell today, Kevin?
It's been fantastic. Today it's breathing. We're getting a little bit of a breather. We're actually seeing some weakness here. This is the weakest of our major indices, but Jeff, the returns on this have been fantastic. The move has been wonderful. We had that 3 straight candles there, Tuesday, Wednesday, Thursday of last week, showing an explosive move through the 200-day moving average. How are we going to take this now?
Well, the thing to keep in mind, too, is as it relates to the overall market for everybody out there, one of the things that you find in some of these rallies is it's just a few big companies that are pushing us higher. So when we're looking at the S&P 500, it could be very possible that something like a Microsoft and NVIDIA, maybe a Tesla and Apple, a Google and Amazon, those companies are what's driving the performance. Now, as you look at the Russell, what we're seeing here, Brett, this is letting you know that there is more than just the biggest companies that are pushing us to these all-time highs. So as you're looking at trading this, potentially what do I draw from this? What's going on? Keep in mind that breadth is starting to widen out a little bit now. It might be time that you start looking at some other companies that have maybe fallen out of love in the previous 4, call it 5 months or so. But as we're looking at this chart, Kevin, getting past that 200 period simple moving average, that blue line, for those of you out there that can see that, I think that's probably going to be viewed as a positive by most traders. But just like we saw a couple weeks ago, as you get past old resistance, does that form new support? Now, in this case, you've got 1, 2, 3, call it maybe potentially 4 closings today. That's that Horner rule, if I remember correctly, my friend. Is that what we're looking for? Is 4 closes for the Horner rule, or is it 3?
Some variation of that, right? Some traders would use 3 consecutive closes. Some want 4 or 5. Some are good with just 1 or 2. Okay. Others might say, what is the percentage we're through the 200 day?
Ooh.
If the 200 day is 2176, for example, let me just do the quick math on this, 2176, and we were going to go, say 3% through that, we would need to be at 2240. And our high here was 2249. So in theory, at one point, Jeff, we were at least 3% above the 200-day moving average. And again, that is not to suggest that traders should rely on a 3% intraday or violation of the 200-day, but rather have a number that is your confirmation. Maybe it's 2% violation. Maybe it's 5%. Maybe it's the 2 days in a row above the 200. Maybe it's 3 days, Jeff. The point is, have some semblance, define confirmation for yourself, right?
Yeah. Okay, perfect. So we'll keep that on the table. Now, what are we going to do with that information? Well, if you've got a little bit of confirmation here, this might be the time where you slowly trickle in. And Kevin, what this reminds me of, going all the way back to when I first started at Schwab, and somebody talked about these buy stops where you would buy something as it's gone higher. I thought, that makes absolutely no sense. Why would I want to buy something that's gone higher? Well, it's because of instances like this that you utilize a buy stop, which says, if I can get a price trade at this level or higher. Sounds very weird, right? Normally we don't want to buy something as it gets higher, but in this case, why would you do that? Because it's broken past its 200 period simple moving average, or it's gone up by X% above that level. Now I'm starting to get interested. Now is when I use something like that buy stop, my friend.
Yeah, the idea there is, of course, playing momentum, right? Given the opportunity for a breakout, some traders expect trending thereafter, momentum-based moves. You take advantage of that opportunity. That's not for everybody, as we know. Again, what we talk about here are just some ways traders might choose to approach these opportunities. Everyone's got a different plan, though, and that's what we remind you about more than anything else. We're trying to give you the reminder that there are 352 different ways to go about every single trade you're thinking about. Try and come up with what makes the most sense for you, your tolerance, your comfort for risk, all of that. It's incumbent on us, the trader, to define that up front so that we can put ourselves in proper transactions, proper opportunities, and opportunities, Jeff, that don't make us uncomfortable. We love to trade. We don't love to trade because it makes us uncomfortable. We want to trade to our comfort. I think that's the reminder I'd like to offer. Jeff, semis. I mean, been on a tear here. We've had a great run. If we looked at the move we've made off of the bottom there at 33.88 as an approximation to where we are right now, we're up about 65% in the last 3 months. Not too shabby for a massive index group like this, Jeff. Through some band of resistance here previously. What else are you going to say about a group that's just been on a tear?
Yeah, it's just incredible. It goes up, takes a little bit of a breath, stops itself at that 20 period simple moving average, which also kind of correlated a little bit with the 200, came back up, down just a little bit from that 20 period, and then you're back up. Of course, when you're looking at a chart like this, it makes it very easy. Where do we think we're going to go from here? Everybody's eyes drawn to the left side of the screen. That previous high, 59.31. So that is probably going to be on the minds of a lot of traders. Are we or are we not going to get to that all-time high? And then are we going to break past that? So that's probably a level that's going to be on the minds of a few traders, at least over, call it the next couple of weeks, maybe even a few months. But you're absolutely right, Kevin. And one of the other things I'll point out, too, as you look at this chart, Notice everybody, these V bottoms. Look how quickly these V bottoms happened back in August. Then in September, you have that big V bottom that happened from April from the Liberation Day stuff.
Yep.
So when you're seeing these V bottoms, what that could mean to some of us is, gosh, we go down quick, but we come back just as fast in this information world that we're living in today. So where you're seeing opportunity might be in, if it goes down sharply, you may start saying, hey, this is why I have a plan ready before we start to see these pullbacks. Maybe have some plans ready in case there's some earnings information that doesn't come out so well, Kevin.
Mm-hmm. And as a reminder, Jeff, I think this window of time dating back to April has been a really good indication or a reminder of how trend traders can go about this process, just incorporating a short-term trend, a short-term moving average like the 20-day. Because the truth is, Jeff, based on what we've seen in the S&P 500, the NASDAQ 100, and the semis, the recapturing of the 20-day all happened on the same day. And I know I'm sounding like a broken record here, everybody, but April 23rd, all three of those big boys recaptured the 20-day. And since, none of them have closed below it. That is not a small development, Jeff. That is a notable development. And the reiteration I want to give is not that you need to take every shot of the major group recapturing the 20-day moving average, but you need to start paying attention to it when it does happen. And Jeff, it may not, for a lot of traders, just looking at the stocks here, it was not likely that they got long here on the very first opportunity through the 20-day. It might have actually been on, this day in particular, because now we had a new high after trading above the 20-day, after coming back and testing it with low trades. You got to have some semblance of an action plan, Jeff. You have to know how you as a trader want to approach these things. Some traders would have gotten going 100%. I'm a 20-day guy. I'm 100% in. That's what they say. Other traders, Jeff, would have been a lot more fearful and said, yeah, that's great. One day through the 20-day, I'm going to sit on my hands and be patient. I need more evidence. I need more detail. And they would have waited 2, 3, 5 days. They might have started small, Jeff, not necessarily 100%, but they had likely a plan where they said, now I'm feeling more confident. Now I'm in a half position size, or now I'm full position. The point is the same, though, isn't it? Having a plan and trying to stick to that plan as long as possible.
I completely agree. One of the things I'll say, and I know we're about to get into some components individually here, but one of the things I talk about with clients in the branches that are starting to trade or that have been trading and aren't doing so great is I say, all right, I give you an 8x11 piece of blank white paper, and I give you a pen or pencil. You have to write down for me so that I, as somebody who doesn't know your strategy, can execute on your strategy. Can you do that? Keep it simple, super traders. Shout out to Mr. Mark Item for coining that phrase a long, long time ago.
Perfect.
But that's one of the things I keep going back to is your strategy easy enough that you can write it down on an 8x11 piece of paper and follow along with it? If you don't yet have that 8x11 piece of paper mentality, maybe start to develop that over the next few days and see, gosh, that's a good point. If I had to give this strategy to somebody else, could they see what the setup is, what my candidates are? How do I identify my entry? How do I identify my exits? And so think about that as you're going about the next couple of days. If you haven't already done that, something to try. It's a fun little exercise, everybody.
Great idea, man. It reminds me of the elevator pitch as it relates to a concept that you want to tell somebody about. Can you get it out in the course of an elevator ride with another individual? If the answer is yes, then you've got it dialed in. If the answer is no, I need 17 minutes to explain this, probably going way too far,
tough.
Right? So as Mark is chiming in, that's right, KISS, baby, that stuff works. Yeah. It does. You don't have to get crazy. You can keep it simple and do absolutely fine here. Jeff, all right, so we've seen some weakness off the open. Not uncommon, especially following some of these headlines that we've covered here today, and a fantastic short market day, but also short on volume market day. Probably just getting some digestion here as we go forward. We do have a lot of stocks in the news, and I thought we could spend a fair bit going through some. Let's lead with some of the weakness, if we could. Some names that people are going to be definitively familiar with. So let's take a peek at some of these, sir. We're going to lead with Netflix. And I'll let you speak to it first on the chart. And let me just tell you what the news is here. So Netflix was downgraded by Seaport Research to neutral. They had been a buy. and they did not provide a price target. The firm is citing valuation and the time needed to execute against expectations for their downgrade. Seaport now sees less than 10% upside in the shares. There's plenty of the long-term opportunity that's already factored into the stock at current levels, according to Seaport Research. So, Jeff, when we look at this one on a trend basis, you could probably look at the fact that the 20-day goes back to mid-April here as well. Haven't had a close below the 20-day yet.
I mean, when you look at a chart like this, when you're thinking of okay, I want to teach somebody the concept of support. This is probably what a lot of folks are going to, where you go, okay, how does it keep bouncing above that 20-period simple moving average? So could that be your support going forward? Potentially, of course. Previous performance is no guarantee of future results. And I know we say that tongue in cheek sometimes, but it's absolutely true. Just because it happened doesn't mean it has to continue happening. But one of the things I'll also point out here, Kevin, that sounds like they are very much fundamentals driven. And I know on today's show and during this discussion, very technical driven. So if you were somebody that was in Netflix or thinking about owning Netflix or possibly wanting to trade off this new information about Netflix, you may have to dig a little bit into the balance sheet, the income statement, and the cash flow to find out what exactly it is that they mean by what they're talking about. But with that said, what might somebody be keeping in mind? Well, that 20-period simple moving average, I think, is going to be getting a lot of attention over these next couple of days to weeks if it does continue to pull back a little bit further. What are your thoughts, my friend?
Yeah, I think you hit the nail on the head here. Reminder needs to be that an analyst comment like this, a downgrade like this, doesn't necessarily apply to the individual trading a shorter term trend. Now, to somebody stepping in here, Seaport's commentary could make sense, right? If they think that upside is limited to another 250 to 300 points to the upside, or 10%, so 120 to 130 points to the upside, risk reward in the short term may not favor the new dollars deployed here if you're going to lean into the view of Seaport. But if you're a long run investor, you probably don't care what an analyst is talking about as it relates to the overall valuation, or you could utilize it as a reason to say, oh, I'm over invested in a stock that's done exceptionally well. And an investor, for example, could say, yeah, I need to pull back on some of that exposure simply because it's done so well for so long, and that maybe it makes up a too large component within a portfolio, Jeff. So there's always a new way to think about it. Every one of us has a different position, no matter how we look at it, right? I mean, that's fair to suggest.
Yeah, so it's that vantage point. You could have 10 different people having 10 different perspectives on the exact same event. Same thing's happening here. Somebody could say, oh, this is wonderful. This is a good buying opportunity for me now that it's pulled back a little bit. Others could say, oh, nope, the analyst is what I'm going to be following. That's what's going to dictate whether I keep my long positions, and they can start to trickle out of it. So a lot of different ways to slice that one.
Always. Yeah. It's a good reminder. You know, there's very many traders and investors in the world, and we all likely have a very different approach to how we go about this stuff, if I'm being perfectly honest. We're going to look at Tesla next, Jeff.
Sure.
A little bit of headlines here, sir. We've obviously know that there was a headline on X this weekend suggesting that Mr. Musk has created a new political party, the American Party. But I think that the bigger overarching detail here, Jeff, they were downgraded by William Blair to market perform from outperform, did not apply a price target. And the reasoning here is the notification at least reminds us the big, beautiful bill removed $7,500 electric vehicle tax credit. That was expected. But the elimination of the corporate average fuel economy fines requires a reset in expectations, according to William Blair. They believe the combination of a demand headwind and from the tax credit removal and Tesla's more than $2 billion in profit from regulatory credits being at risk, that it may be too much for investors to take. So the firm expects the company's reduction in the regulatory credit revenue to result in a direct hit to profitability, prompting yet another across-the-board reset to the models that are telling us where we should find Tesla's fair value. So, Jeff, it's a combination of factors, but I find it notable that William Blair didn't speak anything to, at least to this, in this downgrade, didn't speak anything to the social aspects of Mr. Musk's efforts and actions, I should say. But ultimately, they're talking about this from the business standpoint, and a lot of that commentary doesn't bode favorably.
You wouldn't think so, right? Those tax credits, I know that that's something that's helped them hit some earnings announcements in the past because they're able to sell those to other car companies, and that helps to generate some revenue. One of the things to keep in mind, too, on this particular situation is a lot of investors in Tesla were getting a little upset at Elon spending so much time in the White House. And then when he said, okay, I'm done with that, I'm going to be moving away from politics, you started to see kind of a cheering, a bit of a swelling from Tesla investors saying, good, let's get focused on the AI side of things. Let's focus on what's happening in the robo-taxis. Now you have another shift happening right there, which makes it very, very difficult for some traders out there to say, heck, I can't really figure out a story or a narrative to get behind on this particular situation. While there are still others that say, oh, yes, this is exactly what I'm looking for. I am a volatility trader. I am looking for movement in Tesla, whether it be to the positive or to the negative. Because remember, you can go bullish, you can go bearish. Bulls make money, bears make money, but watch out because pigs will get slaughtered. So there are some opportunists out there that are saying this could be a very good thing. Now, I notice you're highlighting that convergence of the 20, the 50, and the 200. Failure to hold those now today. Is there anything that one might be able to pull or draw from that particular experience right now, Kevin?
Well, my first takeaway is that's
Yeah.
a significant level of now new resistance for us. Any
Okay.
bounce
Okay.
that comes to the position could be significant resistance, but additionally, the fact that we're below all of it tells us something as well. I mean, you had a move here. We had one day where we gapped lower, and then we pushed back higher for 3 days right into that zone, and then rolled over here. Now today is a headline-driven move, we will suggest, and yet that has to be part of the price action. You can't deny the reasoning for it. So the trend clearly is not as bullish as it was a couple months ago, for example, when we had broken out and held, broken back, rallied, made a lower high. This stuff in here is just a mess. I'd say it's
a lot, yeah.
to grab a feel for the existing trend in this position at this time. Do you agree?
Yeah, it's really, really hard. And I like that you're pulling that away because sometimes a messy chart is an unfavorable chart. If I cannot come out with a story or I can't identify a trend in what's happening, then maybe that's just not the right opportunity for me. There's thousands of companies out there. You don't want to get too narrowly focused and forget to see the forest for the trees, as the saying goes to the viewers out there.
It's true, Jeff. That's a great reminder. And sometimes, everybody, it means you just need to go to a different time frame. Maybe you need to look at it over a shorter term window and see if you can gain some understanding. All of the detail I drew in here is still drawn on my intra-period chart, of course, Jeff. So if we were to start seeing bounces at this level, this could be considered to be supportive in nature.
Sure,
but if we took out some of these short-term lows, suddenly it's going to look a lot more bearish. So I think it's certainly appropriate to evaluate things over multiple time frames, and sometimes just changing the time frame will make it a little easier for you to understand what kind of price action matters on an intraday basis here, Jeff. So I drew that line at 273.5 or so. That looks like a pretty interesting level on this chart for potential bounce if we don't get one before that zone. So
definitely
something to monitor there. Okay, another one, a downgrade today. I'm getting some big ones here, everybody, and that's why I wanted to bring them up, because these are all names you all know. CrowdStrike was downgraded by Piper Sandler to neutral. Previously had been overweight. They leave the target unchanged at 505, which is pretty much where we reside right now. The shares are nearing that target. Piper does not see near-term scenario that would meaningfully increase their estimates, according to the analysts. So the firm says that while its disposition towards CrowdStrike and its longer-term opportunity remain favorable, investors should not be adding shares at this time, as upside could be limited over the short to medium term. The analysts are pointing out the stock is up 60% in 3 months. So great question here. As we get through this, Jeff, obviously we can talk about everything we see on CrowdStrike, 20-day moving average here, held since late March, early April. But Sri is asking a good question. Why are so many downgrades coming into the market all of a sudden, Jeff?
Yeah, I got to wonder if it's not these analysts hedging themselves a little bit against the earnings season. Now, keep in mind, a lot of what's happened, and you can check this out if you listen and watch and read Liz Ann Saunders' comments. She's our chief investing strategist. One of the things she talks about is going into earnings season, a lot of analysts start pulling back their earnings predictions because they want to make sure they don't look like they've got egg on their face. I didn't catch that. Shoot. And so what happens is you've got all these analysts start to pull back, and then it makes earnings season look like it's that much better. So I'm not terribly surprised right now, Kevin, that you do see some downgrades. Also wouldn't be surprised if you see a few more coming out this week. But as you're looking at a chart like this on CrowdStrike, talk about a double bottom formation. I mean, if you're doing a class, and I've been very fortunate to do some workshops and seminars and events. Same with you, Kevin. I know you got one coming up this week in Santa Clara. You talk about a double bottom and what does a classic formation look like? And it may look something very similar to what we're seeing here. You notice it drops down, finds that 300 level, comes back up, drops back down, comes back up. Once it breaks past above that, off to the races. Things really start ramping up. And you see that big giant candle happening, call it, I don't know, May 5th, May 6th, somewhere around that time. Yeah. So May 25th or so. So that big movement right there is something that I think a lot of technical traders were looking at. Now that it's happened, that has come to fruition. So to the viewers out there that are saying, well, what now? That's the formation. That's everything that happens with the double bottom. So you've seen the up, down, up, the movement past that, and then getting to what could be the previous up leg or that previous high. Everything from here on forward, and call it maybe even a couple weeks back, but from that point forward does not relate to that double bottom. So I just want to throw that out there to everybody who's looking at that saying, oh, no way, we had a double bottom formation. It's got to keep going. It's got to stay bullish. Not necessarily true. I think what might be more on the minds of traders out there, Kevin, that 20-period simple moving average keeps bouncing off of that, hitting off of that, finding a very nice support level. Is it going to manage that and hold that for a little bit longer, or does this downgrade and potential negative news and other analysts to follow start to bring it into some bearish territory? What are your thoughts, my friend?
It's certainly a possibility, Jeff. That's for sure. Yeah. You're right. The target of the measured move on this double bottom and the break of the neckline here is approximately 100 to 110 points. And if you add that from the 406 area, where do we get? But to 515 to 518, somewhere in that zone. And we've already seen that we've been there. So, 20-day moving average has been held since this breakthrough, throwback, continuation move. You don't have to get cute, Jeff. You know, a trader could easily sit on their hands until they get a close below the 20-day. It'd be the first in more than 3 months. You might as well give that a consideration, I suppose. I mean, some traders are going to give that consideration. Not everybody's going to want to work with the 20-day. Some would say, you know what, I could manage down to the 50-day. But there's a significant move potential on a break of the 50-day, Jeff. That would be a big deal, I'd say. So, you know, monitor. A lot of traders are going to monitor the 50-day. There is a zone of prior highs that would be available as a support, horizontal support around 450. Obviously, we don't want to see a return to the breakout here, but that's always a possibility at around 410. Maybe if and when we saw that, Jeff, maybe that's at a time where the 200-day is finally catching up to that. Maybe that adds some strength or some confluence. But you just don't know how these trends are going to work. But again, what I'm taking from a lot of this commentary from the analyst, Jeff, as much as anything else, and I loved your view that, hey, this could all just be softening the earnings expectations a little bit. Not a bad plan. But also, as the analyst noted here, as it relates to CrowdStrike, stock is up 60% in 3 months. I mean, you can't necessarily continue to run at such returns, right? So traders take note, analysts probably hedging a little bit, but also interested in capitalizing on some of these moves at some point. So
and shout out to Mike too in the comments section helping out. When does earnings season kick off? About mid-July. You're looking for the banks. They're the ones, the financials. They're the ones that set this thing off. So keep an eye out for that.
And we will be hearing from the big banks for sure. Great. And should remind, I know Mike's been reposting this. We do have a survey opportunity there in the chat, everybody. You can click that link real quick and get back to it post-show. It'll open in the browser window right next to this one. And then you can give us a score. You can leave some comments or questions if you'd like. That's up to you. But I promise if you're going to take a minute to let us know your thoughts, we're going to read those. So please take a minute and let us know what your thoughts are on the class today. We always appreciate that. Jeff, let's now that we've focused on some big names on the downgrade list, let's look at some names on the upgrade list this morning. A couple of them are notable. One of them is STZ, it's Constellation Brands. And Jeff, on this one, that's what I find intriguing. is the pattern here. Let me just tell you what happened here. Jefferies upgraded Constellation Brands to buy from hold. They've put a target here at 205 on the stock. That's up from 194. And we're looking at recent lows just around 160. So, Jeff, what are your takeaways on a pattern like this? Certainly, we've seen it. It is a downtrend. That much we can tell, right? Upper left to lower right instead of the inverse of that. But what are you looking at here that might give traders some pause or something to consider?
I may need some help, Kevin. Could you zoom us in, please, just on the last, let's call it month of trading or so? Okay, so to the viewers out there, what am I looking at? I'm looking at that movement above the 20-period simple moving average, and I'm checking out that volume. You see how that green volume increasing? That's letting me know that the audience may be cheering on this movement a little bit more. So as it's going higher and breaking above that 20-period moving average, that could be telling a trader that this is a bull run and that many people are behind it. Now, notice this also. You've got red day. I see very, very low volume. And if you wanted to, and we don't have to do this right now, Kevin, but you can always throw on a simple moving average. Is this volume going to be getting past the moving average of the 20 period on an everyday basis? But as you're looking at this, one of the things that you could be keeping in mind as we're potentially going higher on this upgrade of Constellation Brands is, does this same thing happen where it goes above the 50 and we see increasing green volume? Does that continue to hold? And if that's the case, that may be letting you know that a lot of traders out there are really believing in this movement of Constellation Brands. So you notice there, and thank you, by the way, Kevin, for throwing that on there. You notice there, everybody, we get above that 50-period simple moving average, but Thursday obviously is going to be a light day because of the half day, but very, very low volume on a red day. Now we have today, sure, it's down a little bit, also very low volume, potentially letting you know that not a lot of people are believing in this short-term negative movement. So I think from a technical analysis standpoint, that could still potentially be bull action if we can get up above to that 50 and see some increasing green candles. Kevin, what are your thoughts?
I love the volume call out, obviously, because that is such a wonderful reminder. Look, we don't talk about average vol all that frequently, but it's important because when you see volume that exceeds average, whether it's a 20-day average vol, a 50-day average vol, Jeff, that is not you and me and every other retail trader out there making that shift in volume.
There you go.
That is the smart money, so to speak, the institutional investors who are stepping in at these levels. And it's notable, Jeff, that when we've had trends and trades historically here, these big green candle days are massive volume. This is telling us, Jeff, there's been some accumulation happening down here in this range between 160 and 175. That tells us that the institutions are comfortable putting that money to work here. And it is, as Mark is pointing out, that volume is institutions. It's not from Kansas. I'm so glad he's hitting that nail on the head. Thank you, Mark. We agree. I'm sure that's not a surprise to everybody. But yeah, that's a big deal here, Jeff. And if nothing else, traders could position themselves with limited risk to the downside. Certainly a trader who's uncomfortable would probably say so if they made new lows. It might very well move on if we saw new lows here. But Jeff, if we get to an opportunity to recapture the 50-day or make new short-term highs or get back up above that 200-day, now we're talking about a trend reversal that could be in play there. And it's been a rough go of things, admittedly. Here's the weekly chart. But Jeff, once more, the weekly can tell you quite a bit, can it?
Yeah, most certainly can. And I think this goes to the bigger picture. If you look back and we're talking fundamentals and news stories, alcohol consumption is not as prevalent with the Gen Z as it was with millennials, it was with Generation X and baby boomers. So watch out for that narrative too. You may want to start to see a shift in that story happening if you're saying, okay, I'm going to take a very large position in my overall portfolio. But if you're just somebody, hey, I'm going for a short-term trade, let's see if we can get up to that 200-period simple moving average, that story may not be as big of a focus for those of you out there.
It's true. The commentary, by the way, out of Jefferies is that Hispanics are drinking less beer, but this won't last forever. Constellations and constellation comparisons are easing at an accelerating pace. So the firm says the company's solid balance sheet provided time while the stock's valuation is too cheap, which I just find to be that's the kind of commentary that you want to hear from a company that's maybe giving a bottoming price action here over the last couple of months, notably. So, all right, Jeff, I thought we were going to have time to get to one more, but clearly we do not. You and I, and this is not uncommon. We get a little robust in our commentary. We do get a little verbose, as it may be. Nonetheless, I love having you here. I know I only get you once a month or so, but man, it is great to have you. Great to have you share your thoughts, your insights with our viewers. Thank you so much. Are you going to be anywhere where our viewers can find you here in the coming week or two?
This week I'll be in San Diego on Wednesday, Irvine on Thursday, and then come next week we've got our National Sales Leadership Meeting, so I will be in Dallas for that. Unfortunately, I won't be able to meet with any clients, but following that, you're going to see me back in market like a lot of our other regional investment strategists, meeting with you where you are at a local branch. So if you need to get in contact with us, talk to your financial consultant. We'd be more than happy to meet up. And thank you very much, as always, Kevin, for having me. Pleasure getting to work with you today.
Love having you, buddy. You know it. We love having you here. Thank you. Thanks to all of you for sticking with us all morning, and thanks to Mike Fairborn for managing the chat. Always love hearing from you, everybody. If you take a minute to complete a survey, like I said, we would love your commentary. We'll take that to heart. We'll read that commentary and see if we can't bring that into discussions. And for example, today we leaned heavily into individual equities at the requests of more than a few of you of late. So thank you so much for being part of the segment here, sharing your thoughts and insights with us as well, everybody. So thanks for joining. Hope you all have a great Monday. We look forward to seeing you all again real soon.